Good afternoon. It is Wednesday, the 11th of April, 2007. Brian Shannon speaking here from Alpha Trends Blogspot. Let's take a look at the markets. The Nasdaq 100 did close down 46 cents. Came right down to that level that we were looking at as potential support. Actually, a little bit below that. We've been looking at 44.30. Let's take a look at the shorter term action. You can see that here's that 44.20 to 44.30 really. Came down to the lower end, though, of the recent range. And it was just a matter of time, I guess, before we had a little bit of profit taking. I don't think it's really anything to be concerned about. However, we do have these moving averages heading lower, and that 5-day moving average is flattened out. So it might mean that there's a little bit deeper of a pullback here, and maybe it's just going to turn sideways in here a little bit. But it seems like the easy money on the upside has been made for this little rally. Let's see if the market can regain its footing and head higher again, though. I just drew in some Fibonacci levels off the lows from March 29th up to the recent highs on the morning of the 9th. And you can see here that we came down to the 38.2% retracement level, almost exactly. And we've got further support. The bigger level of support is probably that 43.70 level. Let's take a look at the half-hour time frame and get a little bit different perspective in here. You can see that, again, here's where we are. So it's not broken yet, but we do have lower highs and lower lows today. So that does give us reason for caution. And it's probably time for this market to consolidate a little bit. And let's take a look at the S&P 500. The S&P 500 on the daily time frame, we see here that this market lost 78 cents, which is only a 0.5% versus the full percentage point that the Nasdaq 100 lost. Actually, let's go back to the Nasdaq on the daily for a moment, because I wanted to point out that it came down to the rising 10-day moving average, and that 10-day moving average is above the 20-day moving average, and that 20-day moving average is just starting to pierce up through that 50-day moving average as well. So maybe it's a little bit further down to the 50-day moving average that we get a test of, and that would take us just slightly below $44 a share. And again, like I said yesterday, I think that would be actually a good thing for this market, because it would reinvigorate the short sellers and get rid of some of the weaker holders, which creates a more stable background for the next move higher. Going back to the S&P 500, you can see here, like I said, down 74 cents. It came and held above this prior resistance level in here, though, that has kind of identified this little cup and handle that we've been looking at. So the 143.80 level did hold as support. Let's see if it continues to. We've got research in motion after the close today. I'm probably not going to trade it. It's just a little too volatile and speculative for me in the aftermarket. But that could have a big impact on direction tomorrow. And then, of course, next week is when the earnings reports really start to come in full force. Let's take a look at the intraday time frame. S&P 500. Why don't we throw some Fibonacci on there as well? We'll take the lows from March 29th right over here, going up to those highs. You can see a 1/3 retracement would take it actually down to 143.22. That's if this that was a good print. That's right, I remember that. But anyways, looks like we could still get a little bit further pullback and really not damage this recent trend. So I think the markets remain in good shape. However, we do have in the short term this little series of lower highs and lower lows. We've got that 5-day moving average flattening out, so that tells us it's time to be very cautious in here. Back off on the aggressive purchases, but I still don't think it's time to be short. The daily picture is too bullish to really get aggressively short. The mid caps, we're not supposed to look at the MDY, are we? I don't know why that's still on there. The IWM is what we're supposed to be looking at. And the IWM, well, you know what? We have been looking at, I don't know what we've been looking at. The IWM is what we've been looking at. So let's take a look at that again. We've been looking at the resistance there at $81 a share. And it came up, touched on it again yesterday, but was rejected. Today it sold off on a little bit heavier volume from that level. So it looks like the IWM, the Russell 2000 shares, are going to have to do a little bit further consolidation before they're able to punch up through that 81 level. The support probably down here at about 70, well, we touched it really, 79.80. That's this prior resistance. Did act as support today, so I think that it probably makes sense to go slow the next couple of days, just based on what we're seeing in here. Semiconductors are still in this wide, this longer-term consolidation level, and you can see that it came down to the 5-day moving average, the rising 5-day moving average. Starting to see signs of distribution in here, so it means take it easy. If you're trading the ranges in here, it looks like this rally from this breakout now's the time to be taking profits on it, and perhaps if you're trading within this range, within the next day or so, there might be an opportunity to sell short, but I'm not going to make that call here right now. STKL is a stock that we had gotten long at 12 bucks a share 2 days ago, and we had kept our stop at 11.85. Let's raise that to break even right now. Let's say break even in shares of STKL. Travelzoo, this is a tough stock to trade. I've tried it numerous times over the last couple of weeks, and it's just so damn choppy in here. But anyways, we got involved in Travelzoo at 37.50 back here, and then we had put our stop, I guess, at 37.06. So today we're stopped out of that one with a loss of 44 cents in Travelzoo. I don't think I'll mention that one again. It's just too choppy. They do report earnings next week. They report earnings, I guess, I had it written down here, Tuesday after the close. For speculative players, you might want to try something with options. I don't know. I'm considering possibly buying some calls if I can get them for a good price. HOKU, HOKU Scientific, wanted to buy this one above 628 today. Should bought it about $6.30, let's say. Let's raise our stop in here. We had it at 598. Let's raise our stop to 624 in shares of HOKU. And let's see, we were also looking at ISE today. The idea in here was to buy it on a pullback, after a pullback. We're looking for a pullback to 48.85, and then to purchase the stock on strength above 39.05, or 39.05, which 39.05 occurred right here. Unfortunately, the pullback, the low for today was $39.86, or 40. What am I talking about? $48.86. We're looking for a pullback to $48.85. So that was off. We missed it by a penny. If you jumped the gun and got in early anyways, then there was a quick buck there for the taking on the shares of ISE. But unfortunately, it didn't meet our criteria, so no trade was taken. Same goes for Precision Drilling, PDS. We were looking for a pullback first. The stock gapped up and just kept acting strong for the rest of the day, so no trade taken in PDS either.